Joining us today are Nicola Haigh and Saad Malik from Lloyds. So what are your real estate and housing clients reporting as their biggest challenge when it comes to sustainability? And what are the potential barriers that may be preventing them from making sustainable decisions?
It's such an evolving topic, the sustainability part within real estate. And the great thing is there's some great examples of clients leading the way, finding new ways of doing things, testing new scenarios. And equally, there's others that look to organisations like Lloyds to see how they can do more. And equally, there's some that then have the challenge of time, the challenge of cost, and the challenge of sort of the bit of ambiguity in what regulation will look like in the sector. And that then creates a little bit of either inertia or fear or not wanting to do something right now because of that part. And so that's where we continue to try to find ways to help.
I think kind of generally in the market, that waiting for regulation is probably quite a big kind of challenge. We are skeptical as to what will come, how fast will it come, and so let's just wait until that hits before we do anything. And I think with that, and the upfront costs involved in transitioning, cost of finance being higher, and inflation, all of these kind of market conditions might play a factor in a slowing down of wanting to make that change and transition.
So it seems to me a little bit as though the regulations are a little bit undecided or unclear. Could you give me maybe just a little bit of a better indication of actually where we are?
Just looking at it from a step up, we have a net zero target that is legally binding for the UK. What that means is that the UK government and private and public institutions need to kind of convene a pathway towards that net zero target by 2050. That's quite hard work, and it means that you need to start early. So we are expecting more and more regulations to get us there, and policy changes to shift the market in that direction. So the ones that are kind of mostly top of mind are, we have quite an inefficient existing stock of buildings in the UK. We have some of the least efficient buildings in Europe. The retrofit of those properties and those buildings is a big challenge for the UK, and so kind of a stepped phased shift towards more efficient buildings and retrofitting those buildings is key, and we'll see that with minimum energy efficiency standards pushing harder. And then with new property development, we are expecting some form of within the Warm Homes Plan, some form of policy to drop soon around what is the minimum standard for a new property being built.
From a Lloyds banking perspective, we're trying to provide sort of incentives to help those clients that want to go now, that want to go early. And there's a number of reasons. If a sudden legislation comes in, then suddenly it will force innovation in technology because there'll be higher demand. But equally, there's a need for sort of installers and engineers to make all these things happen, which will suddenly then have a bit of a bottleneck on that part. There's also then the sort of the piece around these are real costs now. So if a building is leaky, for example, then the costs of those bills to either the tenant or to the purchaser, if they're of a developer, they're higher, they're real. So actually doing it now has actually got a payback period as well over time. Plus there's the wider part of the sort of the social purpose as well of trying to make sure we're creating a sustainable built environment to operate in.
There's a kind of a behavioural theme that people talk about called split incentives, where the owner of the property or the landlord thinks, these costs are quite high, and if I make these changes, actually the benefits will be borne and enjoyed by the end tenants and not me. So that's lower energy bills and more comfortable living conditions or working conditions, depending on what type of property it is. Now that is not actually the full story, but that is kind of a general feeling that, I'll make all these changes and I won't enjoy the benefits. Actually, there are additional benefits that aren't as kind of obvious, but for example, when you're the property that you are renting out or even selling has energy efficiency to the point that you feel comfortable when you're inside it, what that does is it encourages the tenants that are there to stay there. So there's an occupancy rates point. There's a demand piece on it as well. So when there are prospective tenants that are looking to occupy this property, especially with the cost of living crisis that we're just a part of at the moment, we care more as consumers around, what are my energy bills going to be and how comfortable am I going to be in this property. Now, if I'm, that the demand will be higher for those properties that actually align with that. So essentially what happens with higher demand, you tend to have higher capital values. You might even have, higher rental premiums. So that's an additional advantage. And I think Nicola actually touched upon this. If the regulation did come, let's say tomorrow, to say all of your properties need to hit X EPC rating by X year, the supply of contractors that can actually make those retrofit changes will stay the same, but the demand will go up, and that tends to increase the cost. So there is a worry that if the cost of retrofit today is what it is, the cost of retrofit tomorrow might be much higher. And so those are kind of things you want to future-proof your business.
Whilst we've been talking a lot around the residential part, there's an equal part to play on the commercial real estate side as well, particularly as people are looking through their supply chains much more, as they're all sort of having their own aspirations to achieve the net zero part. They are looking through to buildings and what can be done. And so that is a wider piece of then who the tenants are, which buildings they will want to work in, as well as the cost of those bills for them as well.
Have you seen any examples of innovation? And if so, what are they?
There are absolutely clients out there leading the way at the moment. We've touched on we support both developers and we support investors. From the developers side, we see a number now that are just using what we call low carbon heating. So actually we've, as on the back of that, actually then looked at doing an enabler to try and help on the credit side of those buildings that are only using low carbon heating. On the investment side, we are seeing a number of units convert from, say, commercial units that we touched on into residential part, and using that as an opportunity to improve their energy efficiency as well. Plus, we have a green building tool that looks then at some, I'd say, easier options to improve the energy efficiency standards. So we're working closely with a number of clients on actually what could they do, what's within a relative affordability, and what would make that biggest impact. And so we're seeing a number really lead from the front. So whilst we talk about some of the challenges, a number of entrepreneurs are going through and making it happen anyway for their businesses.
I had the good fortune of going out and meeting a client and seeing what they do, and it was a development client, and I was so impressed by it. It's very entrepreneurial, like you say. So it's around we saw wood fiber insulation being installed, we saw heat pumps and batteries, inverters, and hardwood windows, and all of that created a very comfortable. It was a cold day, and we were entering these properties and saying, these are very comfortable, and getting the community to actually get involved in the building, which is fantastic because it also adds social impact as well.
From a Lloyds perspective, we have a very clear helping Britain prosper purpose. This couldn't be more aligned in terms of our wanting to support UK either house builders, investors from either the residential or the commercial part. But actually we have our own aspirations as well in terms of our wider commitments as an organisation, and our portfolio falls within that. And there's also a piece of this makes commercial sense from being able to support the clients on the journey. They're reducing their emissions, then our portfolio of clients that we lend to effectively is in a stronger position. There's not a risk that should legislation change, that suddenly we've got assets that don't want to be invested in, or the owners don't want to retrofit. So there is a much wider benefit, but equally then there is a part of we want to be there to support our clients. We know this is on our clients' minds. We know this is a part that's on the horizon for our clients. And if we can't be at the forefront sort of developing new ideas, new products, then actually we've got the ability through a large amount of investment in terms of some of the specialist teams to be able to test and learn new ideas. So actually we can try something with clients, see if it works, see if there's take up, and actually then learn from it, evolve it, continue to make it, which is something where having that sort of wider market present pan-UK as well means that we get to see across the whole market to be able to do that.
So it does seem that we're heading in the right direction. Are you feeling optimistic?
Each step forward, whether it be new products that we're doing internally, we're seeing a huge take up from our clients in terms of the opportunities. We're putting behind it either credit advancements or enhancements or financial advancements and enhancements. So we're really putting sort of money behind it in terms of being able to offer improved products to our clients. And then the other part is, so we're seeing the large take up, but we're also seeing a continued conversation, both from the clients, but also from the government and the regulatory perspective, which will just help accelerate it further.